Hey everybody, Brian here. It is June 10th. It is 11:48 p.m. I want to talk about my next topic of webinar, and these are streamed live on my TradingView account, and you can go there at Brian Downing QLN for the user ID. You can also go to my YouTube channel under the live. I stream there. So what I want to talk about as part of that topic to further kind of like what your appetite about this is regarding de-dollarization. A lot of people seem to think this is not real. This is something we shouldn't be worried about. And I'm going to kind of go through real or not. Um, this is another negative force going against you, not just inflation, not just tax, but this is what's going to worry any politician in government because what's happening is here, as you can see on Market Watch, we're looking at the DXY, which is the US dollar index. So this is the standard benchmark used to measure the performance of the US dollar. So 2022, if you were trading that and just held US dollar, for a lot of Americans, they won't see this because, well, they live in the country, they are holding and going to transact in US dollars. So they won't really feel this. But if you're outside the US and you're transacting, in my case, Canadian dollar or Britain, British pound, you'll be able to see this with the dollar, with the US dollar. So you would have done very well probably last year, and that was the best thing to do in your entire trading to get the best return is just hold US dollar. And it went up about 15% for the entire year where everything else tanked. So this year is a little different. It's very different. You can see here on the year, its 1 year performance is down negative 0.5%. Now you may go, that's not a big deal. And then it went up year to date 0.003, 3 month down almost negative 1%. Then it roars back at 0.85, and then last 5 days it goes down negative 0.44. And why does that matter? Well, if you're an American and you want to travel, and if you have a declining US dollar, that means your dollar is going to get it's going to get a little bit more expensive to travel internationally. Is one thing. The other big thing that nobody wants to talk about, or at least not acknowledge, is that a big chunk of the world, namely the BRICS, Brazil, Russia, India, China, South Africa, the major ones, want to have their own basket of currencies. So that means that fewer and fewer countries will transact in US dollar. Not only that, but the big one that's a real concern for, I think, for the US is oil, and Saudi Arabia is the power play there. If they start transacting, let's say between China and Saudi and accepting the yuan instead of the US dollar, that has a huge impact on the US dollar because less US dollars are used globally, which means then the dollar loses its influence, it loses its reserve status and whatnot. And you may go, well, why does that matter? If you go to the real time debt clocks, okay, this is where you get really concerned because we all have just come off negotiating a really bad situation that shouldn't happen of U.S. debt. The U.S. debt ceiling is put in place to keep spending under control. But now we got politicians, um, certain ones that don't want to have this concern of a debt ceiling. Now, you do away with that. What's going to happen is exactly what you're seeing here. Fewer and fewer people want to use the US dollar because it's a credibility problem and people lose confidence in US dollar. So as a result, you start to get what's happening now. A lot of the credit agencies are looking and putting the US government on negative watch, right? So they could lose their currency status. What does that mean? Well, your insurance, or sorry, your interest rates will go higher and it'll be costing you more to the economy to be able to spend money in the US domestic economy. So here's a lot of the big problem what's going on right now. Like it or not, here's the total US population, 334 million people. There's your number of taxpayers, 128 million. So you're asking 128 million people to carry, quite literally, almost 200 million people on top of that to carry those people for free. Okay. So what goes on is when you start to look at the savings per family at $9,000, okay, uh, personal debt per citizen at $74,000. Every family right now is in real deep doo doo. Just looking at the balance sheet of a typical household in the U.S. Okay, so the only thing that may keep it up right now is the U.S. dollar because of its status, but that's eroding. Okay, so when the U.S. dollar slides like it is, what happens is your standard of living goes radically down because it's going to cost you more to maintain that lifestyle. And at the same time, you have your government trying to keep this afloat, right? So they're going to squeeze what they can out of the paying taxpayer, and yet there's a higher percentage of the population that's kind of like living for free. So that's all maybe fine and good for some people, but at some people it's not sustainable. And just like any company, just like any person, they go bankrupt. And they think by printing more money, which is a complete joke, that credibility becomes even more laughable. And it costs you more in terms of two things: interest to service that debt, as well as the big one is the interest, right? Because the interest is what, or sorry, the inflation. That's why you're seeing the inflation the way it is, because high debt will always bring inflation. That's why you're seeing it. They'll blame it on whatever wars, supply chain. That's all smoke and mirrors. So coming back to this, we got a situation. If I was a U.S. citizen, I'd be very worried about this. Okay. But you can go on about all the other currencies, but gold, not right now. Maybe Bitcoin will become the alternative. We don't know. So let's take a look at what my charts and tear sheets are saying. So right now we've got two tear sheets I can track. If you want to subscribe to this, we have a deep analytics service now. I've been running for a couple of weeks, part of the testing. So far, I'm very happy with it. Right here, you can subscribe for that much. Okay, and you get both the foreign and the US based. Okay, so let's take a look at what's going on. So, first one we have is overseas. That's obviously, this is a US centric service, so it's overseas outside the US. So, this would include currencies like the yen, this would include maybe the Swiss franc and the Japanese yen, and maybe the yuan as well. And this is your benchmark of you'd want to be preferred to be in the markets, the U.S. stock market, because you're getting better performance. As you can see here, it's starting to decline, and this is starting to peak a little bit. And you may go, hold on, why is this peaking? Well, these are 100% ETFs. They're not anything else. And I always joke there's an ETF for that, which there is. If you want to measure some kind of slice and dice part of the economy or the stock market, you can get virtually an ETF for that. Fortunately for us, we can buy ETFs through large brokers like Interactive Brokers, trade, and get them at the lowest cost. You don't have to be a fancy options trader, a fancy futures trader. They're higher risk to hold, to buy, more expensive, more requirement. ETFs are very simple. They're no different than stocks. So you can see here what's going on with the foreign income, or sorry, the foreign currency. Is it starting to perform? It could, but this is the beautiful thing about ETFs. Among ETFs, you get bullish, bearish, and then you can add on leverage up to 3 times. So you don't have to do no crazy Forex trading to get the same leverage, or back in the peak days of the crypto, to put on high risk leverage to get the same comparable return that you would get with a crypto like Bitcoin when it was performing really good. So you can see just on the Sharpe ratio, it's underperforming on the foreign. Okay. So here's your monthly returns, and they're okay. But these could be performance from bearish or bullish, and some of them could be from leveraged ETFs on top of that. So obviously, right now, this is where you want to be. That's holding foreign currency ETFs. But then you also have a separate one, which is US. So you can see it's a totally different story. So with the US dollar, same story. ETFs, some of them can be bullish, some of them can be bearish. Some of them could be leveraged. As you can see here, our standard benchmark now is the QQQ, which is pretty well the next thing to NASDAQ, which is again the big tech. So you're getting performance here, which is pretty good. It's been pretty good for the last few months. But as you can see here, the US dollar ETF, bearish, bullish, whatever, is beating it. And we measure the returns here. So just March, April, you would have done well, and then you would have gotten here in June. Now, this is just for the current basket of ETFs. So if there's a sudden flip when certain ETFs become profitable, the unprofitable ones will be taken out and new profitable ones will be put in. And then you get a new basket of ETFs that may boost that return and get you better protection. So that's part of this analytics. And I do this on purpose. Certain people want certain ETFs by sector. So I did that by currencies and or Forex, same thing for that amount, very, very low amount. And as you can see in the chart, for that price, following the way we do it, you could beat the market, right? And you would have gotten a decent return. Now, I've already shown the dividend income right here. So if you compare that to the currencies with dividend income, uh, right now dividend income is starting to perform. But if you were looking for dividend income in that sector, you would have lost money. You wouldn't get the same performance by if you got better performance with US dollar. Okay, so these are the sort of things that you need to figure out on the timing to not only get performance in whatever performs, but you want to make sure that you've got money lined up in there in those proper sectors. That's why we have these tear sheets to help you get that. So again, for that amount, you know, that I showed here for the US, uh, you can beat the markets, as I said right here. Okay, and not only that, but I've also got what I call my watch list, which will use the best of the best to get the best performance. So certain people will only want to trade currencies, and that's fine. We can do that at a really affordable rate, right? But just so you know, it's a good place to be, and you can still get exposed to uh, to currencies and forex without needing to take high risk forex trading. And these again are all interactive brokers, ETFs that you can buy and sell, not be locked into it like private equity, fully liquid, and usually these are name brand ETF providers that you know of. So these are not Mickey Mouse operations, and very liquid, and at the same time you get really good performance. So if you want to subscribe to either of these, you can just go in the descriptions of where this video is at, and I'll put those links in there. And if you also want to know, you can also subscribe to our get some books, and that's all for free. And you get signed up, and you'll get yourself some goodies right here. I'll put all the links in available for you. And again, this will be the topic this Monday, June 13th, 7 p.m. Actually, it might be tomorrow. Yeah, June 12th, but it's Monday, 7 p.m. East Standard Time. And I'll show you the link for where to go. Just go to my user at Brian Downing, QLN. And usually it helps to spell. And if you're new to, it's all free. If you're new to TradingView, you just go under here under stream, and it'll pop up right there. Here's our last one. Gold versus BTC versus USD versus won. And you can watch these as well. These are over the last couple of weeks. That's about it. Thanks for watching. Have yourselves a good day. Over and out. Later.